Know Your Numbers, episode 3. Have you been watching this little series? I'm on episode 3 of a 4-part series about knowing your numbers, right? And I mean the numbers that helps you understand what's going on in your trades business or your building business. If you haven't seen episodes 1 and 2 yet, head over to the website, smallfish.com.au, and have a little nosy. I'm sure you'll find them. Now, I'm a business coach for trades and builders, if you didn't realise. And a lot of my customers don't really know their numbers, don't give them the attention they deserve, right? You pay attention to your trade and you need to pay attention to your numbers. And if you don't do that, you could be losing money or not making as much money as you deserve without realizing it, right? So I'm going to strongly encourage you to focus on your numbers. Whether you want me to be a business coach or not, I've built a tool. I've built a workbook called the Know Your Numbers Workbook, and an educational video and a tracker called the Big Numbers Tracker to help you track your numbers, right? So I think I've done enough teaching in there for you to be able to do it without me. Of course, if you want me to help you, I'd love to be a business coach. But I've tried to be generous and give you enough information to do it yourself. Now, this video is about understanding your costs, right? I talked in the first two about your revenue and your gross profit, what I call the big numbers. And I talked about the lead indicators, your marketing and your sales. Now I'm talking about costs. It's important to understand them. It's important to understand them properly. And it's easy to misunderstand them. I'm going to talk about labour and I'm going to talk about your overheads. I'm going to ignore materials. They're easy to understand. You get an invoice from your supplier, don't you? If you can't understand that, something's gone horribly wrong. I'll start with labour costs and how much your tradespeople cost you. And I'm not going to go into the maths now. I've made a video called The True Cost of Employment. Go ahead and search for it on my website and watch that if you want to. Or go ahead and get that Big Numbers Tracker and do the calculations for yourself. The gist of it is they cost you quite a lot more than you think, those tradespeople of yours. Certainly in terms of per hour and in terms of how you charge them to your customers, they cost you a lot more than you think. Right? So you might think they're costing you 20, 25, 30, 35, 40 bucks an hour, because that's what you pay them. But think of it like this. You pay them 40 hours a week, 52 weeks a year. But they get 4 weeks holiday, 10 days sick, 10 public holidays or thereabouts. And they spend time every day driving between jobs or driving to Bunnings or picking up equipment from your wholesalers or materials from your wholesalers. They get smoko every day. Right? They get Toolbox talks where you're paying them. They get cut team meetings and training where you're paying them and they're not working. And a million other things that take their time away from being charged to a job. You're still paying them for that time, but you're not charging that time to a job. You need to account for that, right? You need to understand that you need to recover that additional cost where they're not charged to a job. And the way I like to do it is to add it into their charge, what they cost you per charged hour. We'll do some calculations about how many hours in a year you can charge them out for, and then we calculate their cost per charged hour. And the answer is, it's almost double what you think you're paying them, right? So just have a think about that. They cost you per charged hour, almost double what you think you're paying them in an hourly rate. So I do this to help people understand what their costs of labour really are. And I'm usually doing it because they're not as profitable as we would like to think that would like them to be or feel like they should be. And we're looking at increasing the price to make sure we're charging enough to cover what they cost, right? And if you understand what your costs really are, and you understand that you're really not charging enough, it's much easier to be brave about increasing your prices. It's much, I know that you all are afraid of putting your prices up. I know you're all afraid of being beaten on price by your competition. We all are. It's a fact. It's a fact of the world that this happens and we feel that pressure from our customers. But if you're not charging enough to cover your costs, you might as well not go to work. So you need to, right? And you get braver then. Now here's the story. I've been using stories, true ones, to illustrate how this works in real life. So I'm working with a garden maintenance and lawn mowing company. He's got 5 or 6 people. I think it's 6, right? Some permanent employees, some subcontractors, some casuals, and an apprentice even. And he's paying them between 20 and 35 an hour. And he was charging 45 an hour to his customers. And there wasn't much money around. And I was pretty much instantly sure that $45 is not charging enough for a professional trades business. But I got a lot of resistance from my client, People won't pay that. Other people are charging that. People won't pay more, Other people are charging 45. I'll just lose all my customers to those other cheap people. That kind of thing, that kind of resistance. And an understandable resistance. So off we went to the big numbers tracker, right? To work out what's actually going on. We calculated what his people were actually costing him. And bear in mind, it's gardening, right? It's small jobs. They're often not usually a full day. So there's quite a lot of driving in between jobs. There was quite a lot of uncharged time going on. And they were costing him close to, and in a couple of cases, a little bit more than $45 an hour per charged hour. So for some of his guys, he lost money every time they worked, every hour they worked. And for some of his guys, he only made a tiny bit, not enough to cover his overheads, right? And what happened was, because he was working on the tools full time, a full 40-hour week, and then doing his admin work outside that time, he was masking that because he wasn't charging himself to jobs. So his work that he did was covering up for the fact that those guys weren't profitable. But as he was growing and as he was wanting to grow his team and grow the business and pull himself off the tools, that masking was being reduced and the non-profitability was becoming more and more apparent. So of course, he got it, right? He's not a stupid man. He got it. It made sense. He understood and he put his price up to 60 an hour. We started gently. We started with new quotes before we went back to all the old customers and said the price is going up. We staged it in, but he's now charging $60 an hour for all of his customers. He's getting his quotes accepted. He's kept all of his old customers and he's starting to run a profitable business, right? It does work. This stuff really works. If that could be you, please download the tracker, do it on yourself and get your pricing right. Now that brings me to overheads, right? That's your labour. Let's go to overheads. If your cost of sales is materials and labour, then overheads is all your other costs. Okay? Insurances, vehicles, your business coach, very important. Marketing, accountants, bookkeeping, an admin person, everything, the whole lot. And the thing here, again, is that it's more than you think. Your overheads are often more than you think. If you pay yourself a wage, even if it's not massively generous, $80,000 or $1,000 a week or something like that, it's really easy for your overheads to be a couple of $100,000. Right? I know a business who's 600,000 to 700,000 turnover, maybe less, maybe 500,000 turnover. His overheads are 200K, including his salary. Right? That's not even a big trades business. So you need to make enough on your materials and your labour to cover that 200,000 and also to make a profit. Right? A business's job is to make a profit. And you should make a profit on top of your salary for doing the job. Right? That kind of rewards you for all the risk and the stress that goes on. So let's go back to this 200,000. If a business has overheads of 200,000, that's $4,000 a week, approximately. If you've got 4 people in the field, working 40 hours each, that's 160 hours being worked. That 160 hours has to cover that 4,000, doesn't it? Right, 4,000 divided by 160 is $25. So those guys have got to make $25 on top of what they cost you per hour before your business starts turning a profit. Now, I'll be a little bit honest. I'm playing fast and loose with the numbers a little bit. It's a bit more complicated than that. On the one hand, you've got materials and you can make a margin on your materials, which makes you a bit more profitable, makes that $25 a bit less. But on the other hand, I haven't accounted for holidays and all those things that I talked about before here. And so that brings it down a bit. I haven't accounted for mistakes and risk and all that kind of thing. So there's a bit of swings and roundabouts. 25 might not be exactly accurate, but it's pretty close. Right? So if 25 an hour per person is right, you need to add that to what those people cost you, that calculation we just did, right? If we're talking about our lawnmower friend, $45 an hour plus the 25, they need to be earning you $70 an hour before you start turning a profit, before you start having any allowance in there for risk and contingency and things going wrong, right? So they cost you, business costs you more than perhaps you realise. And understanding what those numbers are for you, for your business, is really important. I did this exercise recently with a fencing company. A few months ago, they changed their model. They used to use subcontractors. So, of course, that meant they got a price to install a fence. They could put some margin on it and everything worked. The risk was on the subcontractors. But they shifted their model and now they have employed fencers doing the installations, and the pictures changed a bit, and they're losing money, or they're not making as much money as they should be. So we used the same approach. We worked out what their fences were costing them per hour, and we took this approach for the overheads and added that per hour, and they went, goodness, it brought it home to them, and they've put the hourly rate that they're charging up significantly, so it covers both of those costs and some profit. Now, we've still got some work to do. This is a recent activity, so we haven't seen the results yet, but at least we've seen the problem, we've recognised it, and we've taken action. We've still got some work to do to make sure we allow enough hours in our quotes so that they recover enough money, and we've got some work to do to make sure that their fences take the same amount of time as we've allowed in the quotes, right? Also important. But they've taken that first crucial step. It started with understanding and being confident that you're right now. So I hope this has helped you. I hope this has persuaded you that your numbers are important and understanding your costs are important. Like I said, the tracker's free. All you have to do is share it with 3 of your friends. So press the button, go ahead and download the workbook, read it, watch the video, understand a bit more, download the tracker and start tracking your own numbers, making your own decisions about what you need to change.